Good morning. This is Chris Robinson, Livestock Marketing. If you're signed up for the service, you should have gotten indication last night. And I posted the weekly private webinar. I dug pretty deep into what I thought were levels were for corn and beans. Went through about 18 different slides. So that's something if you're interested in, sign up for it. It's 50 bucks a month. You can turn it off anytime you want if you don't like it. But I do it once a week. You get that in addition to the daily letter, which goes out 6 days a week, Monday through Friday, and then a big weekly wrap. So, on that note, are we going to get some more tweets today from Donald Trump? Because that's what it's going to take to get beans higher, I think. Overnight beans, an 8 cent range, down a penny and a quarter. No tweets at 2:30 a.m. Sadly about bean sales to China. So we'll have to see. In the meantime, we're still dealing with, the data dump that we got from the USDA on Tuesday on that last report, which was not friendly for corn to say the least, not friendly for wheat to say the least. Wheat is making contract lows here. It's up 2.75 cents last night overnight, 5.12 in Chicago. Kansas City up 2 cents at 497 and a half. But I think that's the key there, that I did use that prefix for Kansas City wheat. So there's still downside risk until we can get a turnaround in demand. And I'm not going to, you can't dwell on that. So hopefully we get some tweets. It certainly was a nice spike yesterday. If I'm hedging my corn and beans, I'm maintaining my 410 puts. Some of you have 420s, a lot of you have 410s. We'll see if we can roll those down here and keep you protected. We're definitely going to keep you protected no matter what. I mean, I hope that we go to 460 corn. I really do. But in the meantime, I'm not going to sit here and fumble around and put ourselves in a situation where we end up back at the contract lows, 392, going, wow, I guess we should have done something. That's not what I'm here to do. I'm not here to go, wow, what it could have, should have. I'm here to try and help you point out what we can do today with the tools that we have. November beans, again, it's going to be all about $10. We did go down to $9.93. If you read my letter, if you look at the webinar, I'm looking at that 988 level, 985 level, very, very big long-term support. If that was to fail, then I think, it's going to take more than some tweets about meetings a month from now to help us get beans higher. So I'm hopeful. I'm not bearish. What I am is being very, very protective. I want to protect what's left as we head into harvest and get this, find out exactly what we've got on paper. And then hopefully we get some deal for real between ourselves and China. In the outside markets, stock market still sitting at record all-time highs. That's probably going to be helpful for cattle if cattle can find a new bid. We did get some lower moves in the box beef and things like that, so people are starting to look at that. There's a concern out there that now that the New York Times is concerned about soybeans and the New York Times is concerned about how expensive a steak is, that we may, especially with cattle. You've got the New York Times interested in cattle. You've got, there was another news show on last night about cattle and the expensive beef. And generally, historically, when that happens, it can, capital CAN in quotes, it can signal some sort of near-term top. And if you wonder what I'm talking about, go back and look at 2014, 2015, when cattle was at all-time highs and then corrected. So what we want to do is we don't want to call the top. I don't care about calling the tops, but I want to defend all this revenue that we've picked up here in the last 10 months. That's the key. Defend, defend, defend. Keep the upside open and let Mr. Market do what he's going to do. But there's a lot of revenue out there at risk now in cattle, as well as the hogs. And we were lower across the board yesterday. Hogs are interesting. We had a really friendly pig report last week. We made those contract highs, and we've been slipping ever since then. I'd watched Deese. Deese is back under 90 cents. It's trading at 86.90. There may be a little bit more hedge pressure coming up here. Now, at the end of the day, it's kind of we have two different worlds. We've got the row crops which need help, and we've got the protein complex which is at all-time highs or relative. It's not all-time highs in the hogs, but all-time highs in the cattle, and those are prices that need to be defended and protected. If you're looking for help, give me a call 312-638-8868. Even if you're working with somebody else, it might be a good idea to have some conversations about my approach. If you've never worked with somebody, if you don't understand options, that's fine. I've been working with farmers that don't understand options for the past 15 years. Um, so give me a call. Thank you. 312-638-8868.